Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest stock market news updates that you need to know as an investor. For more videos just like this one, don't forget to go and annihilate that like button right now, subscribe if you are new, go ahead and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube, and with that being said, let's get right into today's stories. We see that the general stock market has surged recently, but in particular, we see technology and growth stocks doing phenomenally well, which is why the Nasdaq got to squeeze out a win yesterday. We also see Nvidia hitting new all-time highs and Juniper Networks surging in their overall share price after the Wall Street Journal reported that they are being acquired, and that's why their shares have literally soared by over 21%. We also see the Nasdaq and the S&P 500 doing pretty well, and Bitcoin is actually falling in their overall price, and Bitcoin, if you didn't know, is a cryptocurrency, and we're going to talk more about Bitcoin a little later in this video. But first, let's go over some single stock news. First, we see Boeing's CEO, which said that the company must acknowledge their mistake as they deal with their 737 MAX 9 planes. And if you didn't know, a panel and a door blew off of a Boeing 737, which really rattled people that were on that flight. So the FAA grounded over 170 planes because of this safety hazard. And this has impacted airlines such as Alaska Airlines, as well as United and a few others. So there has been a major backlash on Boeing and their subcontractor in both media as well as their share price. And if you want more information on that, feel free to check out our last couple news updates. But we also want to talk about a lot of the major companies laying off employees, which would include BlackRock, which cut 600 employees, or 3% of their overall staff, in the face of industry challenges. We also saw Twitch aiming to cut 500 employees, or 35% of their workforce. We also see Meta Platforms in the news again because they are going to restrict various content for teenagers on their platforms such as Instagram and Facebook as they face a lawsuit from 42 general attorneys claiming that Meta Platforms is allowing harmful content which could harm kids. So clearly, if you are a Meta stock investor, you need to be aware of that news update. In other single stock news updates, we see that Starbucks plans to open over 600 locations over in India by 2028. So literally they are expanding 2 stores per week over in India from now until 2028. And if you didn't know, India is one of the most populous countries. So it's going to be a super hot market for Starbucks, which will increase their top and bottom line. So if you are a Starbucks investor, then feel free to look further into this story. However, I am a Starbucks investor and I'm very excited about this development. Like we said earlier, Nvidia has achieved new all-time highs as they dropped a new line of graphic chips, which are designed to enhance artificial intelligence technology on PCs. And as computer sales slow down, this chip maker hopes that AI PCs can recharge this growth. But now let's talk a little bit about BlackRock, ARK Invest, and Bitcoin's spot ETF and what's going on with the Bitcoin price right now. BlackRock, which is a very prominent financial institution, as well as ARK Investment Management, have actually lowered their fees on their proposed spot Bitcoin exchange traded funds, or spot Bitcoin ETFs. So they are looking to undercut dozens of other competitors in this race because as soon as the SEC gives approval for a spot Bitcoin ETF, we are going to see major competition and a lot of firms push out exchange traded funds, also known as ETFs, which will track Bitcoin's price. BlackRock's iShares Bitcoin Trust is going to charge 0.25% compared to their previous 0.3% fee that you are going to have to pay to buy into their ETF. Likewise, ARK Invest's Bitcoin ETF lowered their fee from 0.25% down to 0.21%, which is surprising because ARK Invest normally has a higher fee than a lot of their competitors. But we see that ARK Invest is actually undercutting BlackRock here, making ARK Invest a very competitive ETF in regards to Bitcoin. And again, these ETFs are going to track Bitcoin, but this is not going to allow you to literally hold a Bitcoin. Holding Bitcoin and investing into this ETF are two different things, even though they should perform relatively the same. But why is Bitcoin's price going down despite this increase in interest and competition? Well, the reason for this is because someone from the SEC's Twitter account, also known as their X social media account, was hacked, and they released, whoever hacked it, a tweet which was a fake message saying that the SEC has a approved the long-awaited spot Bitcoin ETF. However, since then, the SEC posted another message saying that their account was hacked and that this is not true, so people are still waiting and anticipating that the SEC, which is the Securities and Exchange Commission, will approve these ETFs at some point this week, preferably. Now, what's interesting to me is that BlackRock as well as Fidelity have been exploring launching Bitcoin-linked funds for quite a while now, and an analyst actually said on approval of this spot Bitcoin ETF, Bitcoin could surge as high as $200,000 by 2025. Now, I personally think that's a little bullish. However, I do see Bitcoin going that high, but maybe not as soon as 2025, but we're just going to have to wait and see. Speaking about ARK Invest lowering their overall fees for their future spot Bitcoin ETF, we also see ARK Invest investing into 3 other major companies, starting off with none other than CRISPR Therapeutics, ticker symbol CRSP, which just reached a huge milestone. CRISPR Therapeutics has officially been approved for their first ever product from the FDA, and that would be Casgevy, which is a treatment for sickle cell disease, marking the world's first regulatory nod for a treatment based on CRISPR gene editing, because CRISPR is a gene editing therapeutics company, and honestly, I think CRISPR's technology is the future of mankind. Next, let's talk about another favorite pick of Cathie Wood of ARK Invest, which is Teladoc Health, and their shares have started to climb recently over the past few months in the double-digit range. Right now, shares of Teladoc look dirt cheap because they have fallen so much in their valuation, and the company's leadership is anticipating high growth as the telemedicine market continues to expand. If you didn't know, Teladoc enables people to have virtual conversations with various doctors and physicians when they are not feeling well or not well enough or even don't want to go to an actual doctor's office. And investors seem to be getting in line right now to pick up Teladoc at cheap valuations. And then last but not least, we have Ginkgo Bioworks, ticker symbol DNA, where this company literally engineers organisms that are not only used in the pharmaceutical industry, but this technology is also used in other industries such as the materials industry and agriculture. Essentially, Ginkgo Bioworks' cell engineering revenue has climbed by double digits, a 52% increase from a recent quarter. And today, Ginkgo Bioworks trades for less than $2 per share, one of their lowest prices ever. And this author, as well as Cathie Wood, believe that right now is a great buying opportunity for investors. So I would love to hear your thoughts about any or all of these companies. Amazon is also in the news today because they are laying off hundreds of media employees. Amazon.com, which is the gigantic e-commerce company who does many other things, is laying off several hundred employees on their media site. And this would include their Prime Video unit as well as MGM Studios. Amazon's entertainment chief even said, and I quote, "Throughout the past year, we've looked at nearly every aspect of our business with an eye towards improving our ability to deliver even more breakthrough movies, TV shows, and live sports in a personalized, easy-to-use entertainment experience for our global customers." He goes on to say, "As a result, we've identified opportunities to reduce or discontinue investments in certain areas while increasing our investment and focus on content and product initiatives that deliver the most impact." End quote. And I completely agree with this move by Amazon. They are trimming the fat, so to speak. They are trimming the segments which aren't working so well, and they are doubling down on the overall aspects, segments, and revenues that are coming in for this company, and I think that is phenomenal. And like we said earlier, Amazon is cutting hundreds of workers and jobs and employees over at Twitch, which is their live streaming business. Literally, they are trimming 35% of that workforce. In 3D printing news, we see 3D Systems, ticker symbol DDD, having an interesting time lately as they promoted their EVP or Industrial Solutions guy up to Chief Commercial Officer, while at the same time they are letting go their Chief Corporate Development Officer, and investors have mixed feelings about this to where DDD is actually falling right now close to 7% in their overall share price, so it seems that investors don't like this move. But now let's talk about the latest upgrades and downgrades on Wall Street. Let's start with the top 5 upgrades. We see Wedbush upgrading Home Depot, ticker symbol HD, to an outperform rating from their initial neutral rating with a price target increase from $330 up to $380, which is great news for this home improvement retailer. We also saw Goldman Sachs upgrade Toast, ticker symbol TOST, ticker name Toast, to a buy rating from their initial neutral rating with a $24 price target because they believe that better profitability trends will come in for Toast throughout the year of 2024. Truist also upgraded Virgin Galactic, ticker symbol SPCE, from a sell rating to a hold rating with a new price target of $3, up from their initial price target of just $1. And if you didn't know, Virgin Galactic is a space tourism company, so this is a very interesting investment. Next up, we have Jefferies upgrading AB InBev, ticker symbol BUD, which is the parent company for Budweiser and other alcoholic drink brands. Jefferies upgraded this stock from a hold rating to a buy rating with a new price target of $76, which is a large increase from their initial $60 price target. Next up, we see Susquehanna upgraded CH Robinson, ticker symbol CHRW, to a neutral rating from their initial negative rating with a price target of $80, which is an increase from their original price target or price prediction of $72. Apparently, the firm feels quote-unquote good about transportation demand in 2024, both domestically within their truckloads as well as international trade. So I would say that this is a pretty good deal for CHRW investors. But now let's talk about the most pressing downgrades. Starting off with Redburn Atlantic downgrading Apple, the company dropped them from a buy rating down to a neutral rating and a price target of just $200, despite iPhone growth returning in 2024. Next up, we saw Bank of America downgrade Zillow, ticker symbol ZG, to a neutral rating from their initial buy rating and a price target of $60. Now, what's interesting is that this price target of $60 is actually an increase from their price prediction originally of $47. So although they have decreased their rating on this company, their price prediction has increased, and this is because there should be a long and steady recovery in the housing market in 2024. Next, let's talk about Etsy, because Goldman Sachs downgraded this company from a buy rating to a neutral rating with a price target of $80, down from the initial $84 price target. And the reason for this is because Goldman Sachs believes that the 2024 gross merchandise sales growth of this company is not going to be as impressive as originally anticipated. Next, let's talk about how Argus downgraded Constellation Brands, which is another beer business. However, they decreased them from a buy rating down to a hold rating. And this is mainly due from competition from other craft brewers. We also see Citigroup downgrade Charles Schwab, which is a huge financial institution, ticker symbol SCHW, from a buy rating down to a neutral rating with a price target of $70, which is a decrease from their initial price target of $75. So very interesting developments. We also see a few firms and analysts actually initiate coverage on various stocks, such as BMO Capital initiated coverage on Affirm, ticker symbol AFRM, which is a buy now and pay later company. Essentially, if you wanted to buy something for $100, you could just buy now and pay later, meaning that you could buy it for $25 and then pay the next $75 that you owe in $25 increments over the next 3 months. And that's essentially what Affirm does. So a very interesting initial coverage by BMO Capital. We also saw JP Morgan restate their coverage on Omnicom, ticker symbol OMC, with an overweight rating and a price target of $106, which is an increase from their original price target of $100 because they think this company is going to do very well in the agency space. And then lastly, this is the best news for me, BMO Capital initiated coverage on SOFI Technologies, ticker symbol SOFI, which is a fintech company or a financial technology company that essentially operates as a digital bank. And they have a market perform rating for SOFI Technologies and a $9 price target. So that is fantastic news, and I anticipate to make a full-on SOFI video just about this price target. So with that being said, go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.